Welcome to the summit. My name is Stefan Whitwell, and I run a nationwide wealth management firm. And I'm so excited to connect with you today because I think this is a really amazing time to be looking at joining the financial industry. And I'm going to focus a little bit on two different industries, both banking and wealth management, for reasons that I'm going to outline here in a second. But let's start with something really, really big that's happening that's not in the news, that is going to be the foundation for the opportunities that I share with you in a second. The fact is that today, the U.S. banking sector is in the middle of a massive crisis. There is a banking crisis going on in America today, but you're not going to read about it in the headlines anymore, right? We heard about it a couple months ago when Silicon Valley Bank was bailed out. But today, you're not hearing anything about it. And part of the reason for that is that the regulators don't want it to be in the news. They don't want to encourage any bank runs. But let's look at why I say there is, in fact, a huge banking crisis going on today. Number one, banks are losing a huge amount of their deposits. Why? It's common sense, right? If you look at the balance sheet, for example, of the king of all kings of banks, JP Chase, great bank in many ways, but they have lost $113 billion in deposits in the last year. And you have to ask yourself, why? Well, the answer is really easy. If you and I were business partners and we had $113 billion on deposit at JP Morgan making nothing, and I said to you, hey, why don't we take it out and invest it in short-term treasuries or in the right, well-selected money market account, I can get us 5%, and we can make $6-7 billion risk-free. What do you think? How long would you have to think about that? You'd be like, well, great, let's do that today, right now. And that's what's happening, right? The crazy fact is that if you know anything about finance, if you're a intelligent consumer of finance today, you would know that you should be able to get, if you pick the right money market fund that does not take much risk, that takes almost no risk, you should be able to make today 5% relatively risk-free, no questions asked. But let me ask you this. What do you think is the average interest rate that banks are paying savings accounts in America today? Okay, I want you to come up with that number in your head. I will tell you right now the answer. As of May, the FDIC that regulates banks, they track this. And as of May, the average interest rate that banks are paying their savings accounts is 0.4%. It's terrible, right? From a consumer standpoint, you should be making 10 times that amount. So what are people doing? They're leaving the bank. And that is causing the cost of funding for banks to go up. So their profit margins are being shrunk. Two, you have pressure on the balance sheet in two different ways. Number one, banks invested in a lot of long-term treasuries. And if you pull up a long-term treasury on any of the financial charting software today, you'll see that they continue to fall in value. 20-year bonds, the 20-year bond ETF in 2022 fell 34%. And bonds have been falling more this year because interest rates keep going up. So there are huge losses on banks' balance sheets. In fact, that's one of the things that tanked Silicon Valley Bank. In fact, what's amazing is that if you did your homework and you looked at the balance sheet as of December 31st, 2022, you would have seen, if you understand even the basics of accounting, that on the publicly available balance sheet, that Silicon Valley had lost all of their money, right? So banks are holding a lot of assets that have fallen in value dramatically. Third, banks are exposed to the commercial real estate crisis that we're seeing today. We're 3 years in, or 3 years, after COVID now. But if you look at human behavior, most people are not going back to the office 5 days a week. In fact, if you look at a study There's a statistic we track that looks at the top 10 urban centers in the US, and they track physical occupancy, not economic occupancy, physical occupancy. It's at 50%, and it's been unchanged for several years. So there's a change in behavior, right? So in the commercial space, we're also seeing other types of change in behavior. 8 years ago, when Amazon came out and said they're going to start selling clothes online, people are like, oh, what a joke. That's never going to happen. You got to go try it on. The returning stuff, if it doesn't fit, it's going to be a hassle. Well, fast forward to today, right? Huge numbers of Americans are shopping, including my wife, my family, me too. I've done it, buying clothes online, buying shoes online, and in record numbers. So we're seeing more and more commerce go online, right? So you have three massive things that are changing. And if I had to add a fourth, let's be honest, a lot of the things that bank tellers do and a lot of things that bankers do, with the advent of intelligent automation and AI, I think we're going to discover in the next 5 years that a lot of those jobs are going to disappear. Some of them are going to be recreated in new areas, but I think that the entire banking sector is going to be reinvented and have to radically transform to survive and continue to thrive. Two interesting things to share with you on that. So first, anytime there's massive revolutionary transformation in an industry, that's going to create a lot of losers and it's going to create a lot of winners. But let's talk about one more thing that's happening that is challenging banks, right? And actually, I'm going to take that back. I'm going to share two more things. So first, you now have non-bank competitors who are starting to compete with banks. A perfect example of that is Apple, who a couple months ago came out. So Apple, by the way, for backstory, has a credit card that they offer with Goldman Sachs, a regular credit card available to American consumers. Well, they just added a savings account that sits side by side with that credit card that pays 4.4%. So 10 times more than the average that banks pay their savings accounts. So if you think about the trust levels that people have with Apple, Apple's got hundreds of millions of just hugely committed, passionate fans. And so they're going to look at their bank statement. They're going to go, wow, my bank's paying me nothing, and Apple's willing to pay me 10 times more. That's a no-brainer, right? So that also is going to be accelerating the departure of deposits from organizations that are paying low interest rates. So now the numbers are bad. Okay, the numbers are bad, but what's even worse, which is what I think one of the most important takeaways of this discussion, is the culture. I think banking culture today is rotten to the core. And let me just say it like this to make it very easy to understand. Apple has made billions and billions and billions of dollars by sitting around with their team of executives thinking, hey, how can we make the experience of a phone or music or drawing or computing more fun, easier, more powerful? They think of cool new stuff, right? And that's why people keep buying more and more of their products. They're finding ways to add more value. But if you look at banking today, banks are making billions of dollars by trying to give you the worst service they can without you leaving. What is the lowest rate of interest they can offer you without you leaving? And I think that is terrible. So you need to be careful, one of the choices you need to make for yourself when you join a company on graduation is thinking about, what kind of person do you want to be? Do you want to join a company whose fundamental business model is based off of screwing the customer, giving them the lowest interest rate they can? And I don't think that's an organization that you want to be part of. The good news is that there are some banks that are waking up to this and creating a much more client-driven business, right? A business that's straightforward. Problem with a lot of big banks today, and I'll use Wells Fargo as an example. You go on Wells Fargo's website, on the upper left-hand corner, click on savings, and then click on another button to go rate check, and that'll take you to a page where their starting rate to you is 0.19%, to my previous point. But in my opinion, speaking to culture, it gets even worse, because if you keep scrolling down, they use fancier and fancier words. They're engaging in trickery to try to trick consumers into giving them money for their savings accounts. Oh, they call it platinum banking or platinum, savings accounts. Well, then it's a higher rate, but it's still below the average. And then they call like special relationship banking, and that's maybe like 2% if you have above millions of dollars or whatever, but that's still less than half of what you should be getting, right? So I just think that a business that tries to trick the consumer by using fancy language and is fundamentally based on increasing your profit by giving worse results to your clients is terrible, decrepit, decaying, and going to be pushed out of business. But now let's talk about an example of a bank that I think gets it. SoFi Bank. And I should disclose that I own shares in SoFi Bank, and so do our clients. But SoFi Bank, a couple of things. One, if you look at their website, just on the homepage, they list kind of right there, hey, here are the different things we do for our clients. And one of them is we open savings accounts. They don't use any fancy words. They don't try to trick you. They say, hey, we offer a 4.5% interest rate. And by the way, we have a new system in place, so we can also guarantee it for bigger than FDIC limits. So if you have $500,000 or $2 million, still guaranteed. Proactive, simple, offering a lot of value up front. That's smart business. The other thing that they do that I think is really clever is there's a sense of member benefits. And one of the benefits that they give you is if you are a member of that bank, they've got a top quality team of career coaches that you can call and speak with and get advice on your career. I think that's brilliant. If you can help your client base be more successful, they're going to be more likely to repay their loans. That improves your performance, and it ties you together because there's a sense of you're really helping each other, right? As opposed to a business model where your profit is maximized by giving your customer the worst outcome, which I think is terrible and a bad expression of capitalism. A better expression of capitalism is one where you've got your client's interest at heart, you're helping them, and that loyalty is repaid by word of mouth and growth in your business. And here's an interesting fact to think about. SoFi Bank in the last year has has basically increased their deposits by 5x. Okay, number one. Number two, in the last quarter, they've added, try to wrap your heads around this, 545,000 new clients. That is people moving with their feet. And I think you're going to see more and more of that. One of the other funny things is if you look around in most cities, there are so many bank branches. You got to ask yourself, do you need that? Ask any adult around you, hey, when's the last time you had an amazing breakthrough, joyful experience in a bank branch? And many people will struggle to come up with an answer. I'm sure there are some. And in fact, a client of ours is the president of a very, very high quality regional bank here in Texas, in Central Texas. And they are incredibly client centric and they are successful. And I think they're going to be one of the winners as well. Company called, I don't want to disclose it because I already told you that they represent, that I represent an executive there. But let me take it from me. There are some successful banks out there that are going to do incredibly well, but there's many more that are going to fail. So here's the opportunity for you. The opportunity is you can go in and be part of a movement to help reinvent banking. How do you use AI to do things? How do you use computers to do things that computers can now do better than many people? Another company called Upstart that's kind of interesting. They're reinventing the credit process. So they're using data, figuring out how to make a loan decision much faster. Instead of weeks, how do we make it in 10 minutes? And how do we make that decision better so that from a lender standpoint, there's a fewer number of losses on that loan portfolio, right? That is the future of banking. So on the wealth management side, I will say the same thing. There are different challenges of integration. Right now, wealth management is a highly segmented business. So there's some people that focus just on investing in privates. Some people focus just on investing in the public markets. Other people focus just on tax strategy. Other people focus just on asset management. But the truth is that to really give the client the highest possible service, you need to integrate tax planning and investing and advanced estate planning. And even more than that, going back to culture, you need to make sure that those things, the way that you do them, are integrated with the client's most important heartfelt values. And I would even argue that the point of wealth management is not to simply make more money for your clients. It's to help them achieve their most important life goals and work backwards from those goals and figure out how can you use the skills you learned in college and that you will hone in the workplace to help them better achieve their life goals. So I think there's an enormous opportunity today to add a sense of humanity and purpose and value in both wealth management and in banking. And I think you're going to see a time of great change, a lot of winners, a lot of losers. And I don't want you to be scared by it. I want you to have your eyes open and know that in periods of great change, there's tremendous opportunity. Thank you for spending time together with me here. I look forward to more conversation together. And I think you should be very excited about the opportunities that are at our feet today in the financial services arena. There'll be a tremendous opportunity for you to make a huge difference for others.